startup sector, the third largest in the world, if I'm not mistaken, has given us great pride, massive opportunities, amazing inspiration, occasionally some entertainment, but of late, heartburn, anxiety, and even heartbreak. So I'm really looking forward to hearing from you how to understand this sector better, because nobody knows better than you big tech, the digital ecosystem, and now you're at the heart of venture capitalism. So Rajan, what's going on?
Yeah, firstly, great to be back at Goafest. It's been a very long time. I think the last time I came, it's probably like half the size at least, maybe. So clearly, congratulations. Looks like the industry is growing, which is wonderful. So look, I think in terms of startups, it's important to keep in mind that technology, much like most other things in the global economy, has cycles. Okay, so we went through arguably probably one of the most, we saw sort of a cycle we hadn't seen in terms of the level of exuberance and so on. And now we are basically, it's, a cycle has corrected. So I know it seems like, look, what's going on? Well, it's basically a technology cycle, right? And maybe let me take a minute on that. So basically we had $7 trillion of liquidity, right? That went into, because of COVID. And 7 trillion was just the US. So you have Western Europe, you have Japan, so basically north of $10 trillion. That essentially flowed into every asset class. Public equities, Bitcoin hit $3 trillion, real estate, and so on and so forth. And clearly, a fair bit of that also flowed into private equity, which is venture capital, late-stage buyouts. And what happens when you have that much capital come into anything, right? It doesn't matter whether it's real estate, whether it's public equities, private equities, you actually do see a level of exuberance. So we went through that cycle, and then, as you would expect with the global economy, things heat up, inflation goes up, interest rates were zero. By the way, when interest rates are zero, it doesn't matter.
Money is very cheap.
Yeah, and also it doesn't matter, right? It doesn't matter whether a company gets profitable tomorrow or 10 years from now. It has the same valuation, okay? So, because, discounted cash flows. But when interest rates go up, your valuations adjust. So what's really happened is interest rates have gone up. Interest rates going up has adjusted public market valuations. That has impacted private market valuations. And now we are sort of back to normal. So actually, Anuradha, if you go back to 2010, there was less than $1 billion going into Indian startups for the full year, okay? 2021, that number went up to 45 billion. Last year was about 25, and this year we're going to settle at probably between 10 and 15 billion. And if you look at sort of a decade, so call it 12 years or so, that's actually a 10 to 15x growth over a decade, which is very, very healthy. So the simple way to think about it is the cycle has corrected. We are back to sort of a trend line that you'll see. And actually, this is the best time, from our firm's standpoint, this is the best time in India to invest, and it is the best time to build a new company.
But hasn't deal making slowed down? That's what I'm hearing and reading.
Yeah, what's happened is, absolutely, right? So if you look at it, we went from 2021, 45 billion of startup funding. Last year was 25 billion. This year will be between 10 and 15, right? Absolutely slowed down. But what has happened is the late stage funding has slowed down, right? And the reason it slowed down is because the best companies raised a lot of capital in 2021 and the first half of 2022. They don't need to raise capital. And also the reality is now, if you want to raise growth capital, you have to have very strong unit economics. Many will have to be profitable. And that's going to take a couple of years. But in the early stage, which is sort of where I spend most of my time nowadays. Surge, seed, Series A, markets are very, very active. In fact, we're as active as we've been, for a long time.
So for lay people, when seed, Series A, Series B, growth, venture, late stage, just give us a sense. Because we need to understand how a startup functions or what that life circle is like, so that businesses that are ancillaries to it can also understand how to prepare for what's going on.
Yeah, no, I think it's a great question. So basically, seed is, the first capital that you would raise, right? So it could be you're raising, $500,000, which is 4 crores. You could raise 8 crores, you could raise 16 crores, okay? So at Sequoia, our average seed check is about $1.5 million, which is 12 crores. 50% of companies that we fund with 12 crores on average have not written a single line of code. Okay, 2 very good founders, or maybe 3 founders, or 1 founder just starting up.
Right.
They've just left Flipkart or Freshworks or Google or Facebook or pick your favorite company, urban company. They've got a great idea. That's sort of the first. But it could be 2 crores, could be. So that's seed.
Yeah.
So think of it as the first stage. And by the way, there are different definitions of seed,
Sure.
but let's keep it that.
Yeah.
Series A is after you've launched the company and you've got what's called product market fit, i.e., a set of users, be they consumers or businesses, really like the product. They keep buying it. That's called product market fit.
Right.
Then you raise between, I'd say, $5 million and $10 million in today's market, right? So call it 40 crores to 80 crores. So that is sort of a Series A, and then it goes on from that. Series B could be $10 to $20 million. Series C could be $20 to $50 million, right? So what has happened in India is Series B rounds and beyond. So if you're trying to raise, let's call it 15 million a pound. If you're trying to raise more than 100 crores, that market has slowed down. But if you're trying to raise less than 100 crores, that market's actually very, very active. So the number of companies starting up and raising a seed round is actually very healthy today.
So the guys who consumers have encountered via advertising, right? So the big splashy advertising, the sponsorship, Baiju sponsorships, I can name so many of them in your, the Sequoia stable of companies. What stage is that?
No, that's growth stage. So I think the reason I think that this community probably feels, feels like, a lot of revenue has gone away.
It's been completely sucked out, right? I mean, come on.
Agreed.
People going back from sponsorships.
It's a simple thing. Look, all late-stage companies have one priority, which is to get profitable, to get profitable, to get profitable, and to get profitable, right? So the top 4 priorities, if you're a growth stage company today, and so what that means is, if you're not profitable, you're only going to spend on advertising that has a very clear, near-term return on investment. Okay, so that's why I think if you look at IPL, for instance, last year's IPL had a large number of startups. This year's IPL.
No, and look at the IPL valuation, the rights that have been sold, astronomical.
Exactly. So because and that option,
perhaps that confidence that broadcasters and digital guys put down was because they thought this party would continue, isn't it?
See, the thing is, building a business plan on 2021 was not a great idea. Because 2021 was a very different year, right? But actually, building a business plan on today is a very good idea, because essentially what we're going to see. So Anuradha, the reason that you've seen a lot of ad spend from late stage, what we call late stage companies, right, go down is because they're all focused on getting profitable. Now, what you're going to see in India, Anuradha, is over the next 18 months, every late stage company will only have 2 end states. Either they're going to get profitable or they're going to be out of business.
Wow.
Okay? No, that's it. I mean, basically, because if you're not a profitable company, you can't go public in India today. So what we've learned
we saw what happened with all those
by the way,
big guys who
here's
went
another
with the
interesting
IPOs,
thing
right?
I'd say,
all of them, bar none, below their offer price.
No, by the way, this is not just in India, okay? So global tech, public global tech, if you look at NASDAQ, on average, a public NASDAQ company is down 50%. A lot of companies are down 70, 80%, right? So we shouldn't just say it's only happening in India, because it's happened around the world, because interest rates, which were 0, are now at 6%.
Rajan, go back to the point you were making. Sorry, I just butted in there. But the point you were making about either they will be profitable or they will be out of business.
Yeah, because, essentially, but what we believe, Anuradha, is that most late-stage companies in India will actually get profitable. And we're seeing this, right? If you look at the level, the rapid pace of improvement in profitability, you can look at public tech in India, right? So companies like Paytm and so on and so forth. It's actually quite staggering how quickly they're becoming profitable. And what we actually believe is that a large number of growth stage companies in India will get profitable. So I think for this community, which is the advertising community, what you should expect is, yes, muted levels of spend for the next, call it 12 to 18 months. But coming out of that, now this is, by the way, I know 6 quarters is a very long time. I used to be in the operating world, so I know what that is. But when you get into 2026, okay, you're going to be faced with a set of clients who are in very strong foundational positions, okay? They'll be like, for instance, right, HUL, doesn't cut spend by 50%. When the market slows, I don't know, I haven't spoken to the HUL team, but they probably cut spend by 10, 15%.
But if you take HUL as an illustration of classical business and the way it grows, it's completely not the model that startups follow, right? Or have followed, because it's about valuation. Every fundraise is about valuation. And the problem there is that we keep hearing this conversation about path to profitability, unit economics. I mean, an HUL, because you use that as an illustration of FMCG, old economy, rock solid company. These are companies that look at profitability from day one.
So I think, Anuradha, it's important that today, as we speak, in the startup economy, everybody, and I mean everybody, from the earlier stage founders to the growth stage founders, and you're obviously seeing this in the public companies, right? Whether it's Paytm, I mean, if you speak to Vijay, the only thing he talks about is being profitable, right? Now he's EBITDA positive, adjusted EBITDA positive, next is get EBITDA positive and get to free cash flow positive. So we will see the ecosystem go, because today the big question is, where are the profits? All I can say is give it 12 to 18 months, we are going to see enormous profits, right? Today, actually, and the fact that you can make money in these companies, if you look at Dream 11, which I think is an IPL sponsor still, right? Over 2,000 crores of free cash flow, okay? That is what you should expect many of these companies to start doing. You know, you're not talking about 100, 200, 300, 500 crores of profits, okay? You're talking about, because once these companies inflect, right? And by the way, so they will in the near term obviously have to cut out all expenses that don't lead to very tangible and high return on investment. But once they turn the corner, you're going to see a very, 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 very profitable companies that will come out of this.
Rajan, I'm guessing that there's been a lot of introspection in all quarters. There was a report that Sequoia hosted a bunch of VCs in Bangalore recently. What's the mood? What's the introspection that you guys are doing? Because really, the purse strings are with you.
No, so first of all, by the way, what we had in Bangalore was a mixer. Because, you guys have 2,000 people having a mixer at Goa. I mean, it's okay for us to get all our peers together for one evening in our office to have a mixer. But somebody wrote about it. Clearly there's not enough news today for the media to cover on startups. So we need to, give you guys more interesting things to talk about. But look, Anuradha, the mood is actually very positive. So let me give you a few interesting data points, okay? Today there is more dry powder, what we call dry powder, which is uninvested venture capital dollars or rupees that has been raised only for India than there's ever been. Okay? There's more capital than we've ever had. Yes, it's being invested more prudently and slower than in the past in the growth stages, right? The quality of the founders who are starting up is dramatically higher. The quality of the business. I'll give you an interesting example. The fastest, so as Sequoia, we are very active investors in new consumer brands. Okay? The fastest 0 to 100 crore brand in India is a beauty brand out of Jaipur. I can't tell you the name. 0 to 100 crores in 9 months, 20% profit after tax. They just crossed 400 crores. This company in 2 years will get to 1,000 crores, will generate 200 to 300 crores of PAT, profit after tax, and go public. So that is what we are seeing now, right? Because what has happened over a decade is that India's digital highways, which is basically transaction ecosystems, e-commerce platforms, logistics platforms, payments, all of that has been built. And a lot of money has been spent to build these platforms, right?
So is the two questions actually based on things you've just said. Let me tackle the first one, which is what we are living through now like a watershed moment? So will there be a before and after in the way India's startup economy evolves? Or because you said it's also cyclical, we'll forget this time and go back at some point again when the macroeconomic situation is different to the same.
Yeah, I think it's fair to say, since there's a lot of folks here, 2021 isn't coming back for a long time. Okay, so I don't think you should expect 2021 to come back in this decade. Now, of course, these cycles will happen, so I can't tell you when it will happen, but memory is not that short. But I do think for this industry, for this community, what is happening is very good, right? Because what you don't want, you want to have tens, if not 100 HULs. Okay? So what I can tell you is, not in the next 2 years, But over the next decade, Anuradha, the startup ecosystem will deliver dozens of HULs. Very strong, fundamentally well-run companies that generate an enormous amount of profits.
Yeah.
Right? And all you have to do, by the way, is you can look at 4 or 5 companies, some private, some public. Look at InfoEdge, you look at Dream11, you look at IndiaMart, you look at a bunch of these companies, right? And everybody says, hey, Rajan, you give me the same 5 names. Every month, there's a new name being added.
You know, since songs are the theme of the season and the fest, what's the theme song for VCs today?
There's never been a better time.
Okay.
Thank
Ladies
you.
and gentlemen, Rajan Anandan, thank you.